Hi and welcome to the Market Alert for Wednesday, the 11th of August 2021. So consumer inflation are likely to be another scorcher in July, economists say. Well, there's always a problem with headlines, as we know, particularly in the last 12 months. New survey shows, could be, maybe, etc. But the 3 points below, economists expect a hot inflation report for July, but the jump in consumer prices has likely peaked. So there we go. You see double speak. The consumer price index will be released on Wednesday morning. Economists agree that it's climbed 0.5% for July and 5.3% on a year-over-year basis, according to Dow Jones. I don't call that a scorcher. And although inflation is expected to have peaked, the debate over whether it is temporarily elevated will not end, as economists expect to see continued increases in rent prices. It's all like I say, double speak, isn't it? You know, in 1 second we've got this, no pun intended, inflated headline, sensationalism. And then you start to read the detail, and they're actually predicting that. They're looking at 0.5, and then we're told that it's peaked, and then the only thing that might increase it is rent prices. So again, we'll have to wait and see. You just have to wait and see. You see, what this does is put people on the back foot now, thinking that it's going to be a scorcher, especially coming from somewhere like CNBC, and then the figure's probably going to come out lower, and then it's just going to slam the metals markets once more. That would be my take on how they're actually going to play this. It's unlikely, given what happened on Friday. I mean, they only needed an extra 70,000 jobs, and look what they did. Although there is talk that there was a metals fund that had to liquidate, but I mean, liquidating 10 billion futures contracts on the overnight Sunday markets in Asia is an interesting one, to say the least. But we'll have to wait and see what comes out at 1:30. But the market's going to be quiet, waiting for this one. Yesterday, the implied volatility up to 1367 from 1361. Today, all eyes are on the 1:30 news. There's no point in looking at anything else. And that's about it for that as far as the news is concerned. Let's have a look at the DAX. You can see we're sideways. We've been this way now since Friday. We're waiting for the news. If it's good, we go straight through the all-time high, unless we have a run at it this morning. There's always a possibility of the market doing that beforehand, and then if they do have an advance notice, then we can see that follow. So always look at both sides of the coin just in case. 30 minutes, not a lot for yesterday. The market managing to move higher once it had taken out the short side, came back and then sat on the DP yesterday, and then moved up with the Dow in the afternoon. But look at the range. I mean, there's only 50 points between these two lines here, and it's become even narrower. I thought this was a bad tick, but it appears it's not, or maybe not. I haven't got anything else to compare it with. The volume in the smaller time frame, if we have a look at the 2 minute in just a second, there we go. You can see that we've got a huge volume. Now, if it was a bad tick, normally you don't get that. So I don't know what happened overnight that the market moved lower. Maybe there was an announcement or something. I did see another report this morning. They were talking about another trillion stimulus along with the 3.9 stimulus. So whether that was it, I don't know. But while we're here, let's just have a look at yesterday, because the market was so quiet, there's not much point in looking at the detail. We started off with the market attempting to move lower, and they immediately reversed. That was just a ploy. As I said in yesterday's market alert, it was likely to be quiet, as this is a really big deal, as the non-farm payroll figures will be going forward, given what they did with them on Friday. So the non-farm payroll, FOMC, and the CPI figures at the moment, the day before the market's lackluster. We managed to move up, but not a lot. Each of these divisions, this is 12.5 points between these, so 12.5 and 12.5. So you can see that we barely moved yesterday. The market putting in some selling here. You can see the market coming back coming back 78% as it did here, and then moving lower. The afternoon was really quiet. The Dow shot up, the DAX didn't. It just traded sideways and just drifted down again. Really, really quiet. And in fact, we've got to actually compress the chart to even find 50 points between the two lines. So again, the market is coming down 25 points in total. And nothing really happening there. And then overnight, you can see the market's moving to the upside initially, but now coming back towards the close, but very quiet. It won't be later, but at the moment it is. And let's have a look at the Dow. This also stuck in a sideways move as well. Already put in a new all-time high, which we can see there, so ready to get through another one if the figures are good enough. At the moment, you can see how coiled we've been overnight as well, all sideways, waiting for the news. And then in the metals markets, silver currently finding a bit of support, but this is the one, along with the dollar, is going to be the interesting one. I'm just going to go to the weekly chart of silver because we've got nothing in the daily chart to really draw off. We can see that we're stuck in a range, and the low here is back to December and also to September of last year. So 21.68 is crucial. We break this, we go down to the 200 moving average and the fibs in between. So if I was to draw in from there to there, you can see that we've got an 89 in there. We have to come back here to actually find more fibs. So let me just remove that. You can see how we found support at the 89 on Sunday night. But let me just draw this in. And this low here that we had back in March of last year, when we went down to $13 when I bought in initially. Listen, if they want to bring it down to that level, that's fine by me. Because I made a mistake. I went in with too low a bet per point when I actually took that trade. I did well in the ETFs, made over £30,000 in that, and for 400 or 500%. So I know what the potential is. It's just a matter of waiting to see what the market will do today. So there's the sort of 62% retracement, so that would make sense if we went down to that sort of price. 18.69 could be on the cards, but we'll have to take out the support at 21.68 to begin with. That's the reality, that's the manipulation, that's what they're prepared to do, and we just got to live with it. So 18 is fine. I do have positions on down at that level which I would be taken out on, that's for sure. Let me just see if I can find these. They're in here somewhere. Let's just bring that up and then make it a bit bigger, and you'll see all of the positions there, down to all of them have got stops on there, down at the 1740 level, so still quite a distance away, but I'd be quite happy to if they want to bring it down, not a problem at all. I can just go back in and increase the bet per point, because when it all goes tits up, and it will one day, then you're going to be positioned nicely. So bring it on. I don't mind whatsoever if they want to do that. I'll also add to the physical holdings that I have as well. I mean, what they're doing is offering us a deal of a lifetime, frankly. So if they want to do it, then go ahead. I thought we'd miss that chance of actually being able to get back in at lower prices, but that doesn't appear to be the case. And certainly the physical market has far less silver available now than it did this time last year. So bizarre that they can get away with this crap, but they can. So we'll use it and say thank you very much. Simple as that. In the gold market, that also finding a bit of support there at the moment, just sideways, waiting for the news. It's going to be interesting at 130, that's for sure. And in the US dollar, we can see this has been moving to the upside, taking out the 89% that we drew in. We've got the high there of 93.15. Now, of course, if the inflation news is correct, or the early warning that it's going to be a scorcher, that's going to be bad news for the dollar, and good news for the metals, but we'll have to wait and see. They lob these sort of reports out, as I said earlier, just to put people or wrong foot them, just to think, well, it's going to go up, so I'll buy the stock market, etc., etc., and then it can come out completely the opposite way. It's designed and engineered that way so that you take the opposite side of the trade and get burned. So again, it's just a matter of sitting on your hands, waiting for the news, and then taking a view once that news has been released. And the view comes from whatever the market action is, not the interpretation of it, because they will interpret it in whatever way they wish, as we saw last week with the NFP numbers. Okay, that will do it for this one. Let's see what happens at 1:30. Hang on to your hats, as it were, because it's certainly going to be an interesting one. And as ever, thanks for watching. See you in the next one.